Okay, what's up, people? Welcome back to another stream. Hope everyone is doing well, as always. If you are enjoying the content, please be sure to subscribe. Can get my words out there to subscribe, and of course, hit the like button as well. It is all very much appreciated, and of course, make sure you do hit the bell too, so you don't miss out on any streams or uploads in the future. As always, if there's any markets you are interested in, please be sure to let us know. Drop it in the chat, any recommendations, charts you're looking to trade. Of course, any questions, topics you want to discuss, let us know as well. But of course, we do have Christmas this week, funny enough. So markets will be looking to probably start to drop in volume and in terms of activity. So take that into account. But of course, the markets are still open at the moment. We can still see some movement. It's just I won't expect to see some big trend continuation, especially on like the FX markets as well. But of course, we'll go through a bunch of markets. We'll start with the USD, see what's going on in that world. Of course, yen was very busy last week. Big moves. Are they still set to continue, or potentially going to see some retracement? We'll discuss that as well. And of course, any other recommendations we shall go through too. What's up, Replay? Welcome to the stream. Hope you're doing good. What's up, my man? What's up, Mark? Welcome to the stream. CHF looks strongest. Yeah, I mean, predominantly CHF has been pretty much strong for the past year or 2 years even. It's probably the strongest currency since then. So yeah, anything kind of against the CHF, you're mainly looking to sell. And that still looks to be the case. What's up, Wilfred? Welcome to the stream. What's up, Roddy? Welcome to the stream. Hope you're doing good. Let's have a serious look at gold. Haven't broken all-time highs yet. That is very true. Gold just spiked highs. Silver as well, still ripping all-time highs too. That one's just absolutely flying. I'm doing good, Wilfred. Hope you're doing good. What's up, CS, my man? Hope you are doing well. So we'll start with gold, and we can take a look at silver as well. But yeah, absolutely true. Price is still looking very bullish. On the weekly analysis, I said it would be nice to get some pullbacks for this one, but no, the market is still very bullish. And of course, we've just gone and created new all-time highs past 43.80. So the current context is very bullish. You don't really want to be looking to sell a market like this, maybe temporarily, but again, trading's all about quality over quantity. And in this situation, the only quality lies with the buyers. Now that we have broken highs, it's not necessarily, okay, I'm expecting price to hit this level next, because we don't necessarily know that, or we can't really say that with much confidence. I would say the next big psychological level where we could have a tension, potentially orders resting, would be 4,500. Big psychological level is the midpoint between 4K and 5K. So psychologically wise, that could be an area where potentially you could see a lot of orders and maybe where price could potentially bounce. So that's the only logical target I have. Of course, you can use like fib extension levels and stuff like that, but in terms of actual price, which may have some meaning, 4,500 is probably where we could see that. In terms of current price action, especially if you're intraday, you want to be looking for pullbacks, buying the dips, essentially. Momentum still with the buyers. We had a large consolidation here, which didn't last. Well, it did actually last, but inevitably price did break to the upside. And of course, we're just going to rip through some highs there to our left as well. And that has basically set the theme. Didn't mean to do that. Has basically set the theme. So again, if you're not in a position, you're now waiting for price to come back into value and then look for continuation. Right now, there's nothing really trading at these prices. So any buying here, I do think you're a little bit stretched. Again, I understand the context of things. The market can still rip, but it just doesn't feel comfortable. You're not positioned well if you're looking to buy right at the highs, unless you're in it for a quick scalp. So gold, you want to see some retracement. This is the hourly chart as well. You can see consecutive bullish candles pretty much as the week candle open. We've just been consecutively bullish until 8 a.m. UK time. So the market's quite imbalanced as well. So a pullback to value is necessary. I would say at least a push, back to this high, and then we can see what price does. Perhaps we find some value, and perhaps we look for continuation. So gold, looking for pullbacks. I think that's the right mentality to have in this situation. But unless you're in a trade, you want to wait for price to pull back. I'm not seeing much opportunity there otherwise. But yeah, gold's extremely bullish. Opportunities on pullbacks. Just keeping it very simple. No need to overcomplicate the analysis here. The market is very bullish. That's the direction you want to be trading in. A lot of people now will be seeing new all-time highs and think sell, 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 sell. Which I think is you're looking for danger there. Any upside targets for Swiss yen? There's 200, which is a huge psychological level. Swiss yen could potentially be attracted to that level. Same concept as we just discussed with gold. So if I flick to the weekly chart, this here is 200, which again going to be a big psychological level. I would expect to see some orders there, reactions there. Doesn't necessarily mean price has to revert from there. We could still blast straight through. Again, these are prices we haven't traded before, so it's difficult to say if we're actually going to have we're eventually going to have the pullback, but it's difficult to say where it's likely to happen apart from using these price levels. So upside targets 200, and that's about it. Other than that, I'm just seeing what the market does. Again, trading is not necessarily about trying to predict where the market's going to go. It's more so reacting to what the market is giving you. Potentially we get to 200, we see some aggressive selling pressure, then we react to that. If price gets to 200 and blast straight through, react to that as well. So the trend is still very bullish. In terms of value below us, I like the high here. Of course, this is just before the news happened and price broke straight through. We are starting to create some structure here, but we are looking a little bit tired. We've got this massive bullish candle. If price does start to break structure there is the opportunity for retracement before continuation there. But again, 200 not too far. So what would be nice would be something like this, and then a push to 200. That would be a nice opportunity. But it's difficult to see what happens now with the yen pairs because they're still looking very bullish. They could still keep pushing higher. Retracement isn't mandatory right now. We could still keep pushing. Okay, I'll drop to the 15 for gold, Roddy. Euro Aussie expecting sales. Yeah, Euro Aussie is looking like we could see some downsides. A little bit. It is very unimbalanced on the higher time frames. We're seeing a lot of struggle there. So we could see some downside back to support, back to lows for Euro Aussie. We'll take a look at that as well. Can I capitalize on that recent high created on the hour on gold? Okay, we can take a look. Good afternoon, Lorraine. Yes, we can take a look at pound yen as well. I'll quickly go through gold because I was just on it. And I'll take a look at Euro Aussie and pound yen. Of course, any other requests, drop it in the chat. We can definitely discuss. New Zealand CHF, replay. We can have a look see at that market as well. So capitalize on the opportunity on the hour 15 chart. Like I said, market's very, very stretched. I would not be looking to buy here. Because again, when you're looking to take a trade, you have to see what the opportunity you're trying to take advantage of. When you're looking to take advantage of a retracement in a trend, you're basically saying that I expect the selling to be done and I'm expecting buying to continue. What here is inherently said that selling is done. There's not much. We've seen two bearish candles. Now the market looks like it's pushing back up again. The opportunity is just back to the high there as well. So your R's capped too. Not to say that price can't do that. It's probably likely to do that. It's just there's not a lot of opportunity to dig into this apart from a push back to 44.20, and then beyond that is no man's land again. Back at the all-time highs. So in terms of entries and just opportunity, very, very small margin. Yes, the trend is still up and still intact, so it probably is likely to push back to highs. But I just don't think the quality opportunity is that high, especially when we're very stretched from value too. Because think about it, once you've had this breakout, a lot of people are just buying into this as well. So this will cause the market to probably have a little bit of a surge, and then we'll probably find value in a pullback later in the week, maybe, or even next week potentially. So unless you're looking for a very small opportunity back to highs, I can see the opportunity there. Anything else, the market's too stretched. I need to see a deeper pullback. So it depends what you trade. If it's very short-term scope, okay. If you're looking to try and swing it for another day, I don't think you're positioned great for that. I know the market is very bullish, but still, you want to be trading from smaller areas. If the market retraces, great. If it doesn't, it doesn't. We can take a look at Euro Aussie, and we'll have a look at pound yen and New Zealand CHF. So I do agree with the Euro Aussie situation here. It looks like Euro Aussie is very struggling. Looks like price is failing to maintain that consolidation. We pull back into supply there on our left as well. And altogether, you can see how price is just taking out these lows one after the other. And then I was looking to see if price can expand higher. We failed, respected this zone. So where's the path of least resistance? Path of least resistance will be a push back to the lows here. Ask yourself, who's struggling here? Is the buyers struggling or the sellers are struggling? From what I can see, it looks like the buyers are struggling. Support keeps consistently breaking. Highs still being maintained. Now lower highs are coming into the market as well. Potentially could see a push even back to here to go and find stronger buys to maintain this uptrend. So in terms of the likeliness of a move lower, I would say it's pretty likely. And then 1.75 is your next barrier of support. Break through that, and I would say the lows here is your next barrier of support, 1.73, 1.72. So yeah, I do agree with the bearish outlook there on Euro Aussie. I would say as long as we can hold this, if price suddenly expands and breaks through that, then that puts that bearish bias to bed, because at that point, buyers are starting to regain structure. Yes, we do have resistance above us, but I would say the directional advantage just becomes ambiguous. As buyers are starting to win, sellers are starting to weaken. No one's really in control of the situation. So yeah, it's important we maintain 1.78, which looks like we're doing. And if that's the case, well, I would expect 1.75. We'll see what happens there. Then potentially 1.73. So yeah, I do agree with the Euro Aussie outlook. We'll go through pound yen, then New Zealand CHF. So pound yen is a similar outlook to which yen pair we just take a look at. Euro yen, Swiss yen, sorry. Yeah, pound yen still flying, smashing through big levels. Let me just go to like the monthly charts to get a better outlook, because now that we've broken through this high, we have to scale even higher to find points of reference. Well, there is a level resting just above priced at 214. That could be a bit of an attraction to price, and potentially could see some sellers enter the market there as well. The next big level for pound yen, I would say, is up here, 240 roughly, where we had selling pressure kick in from these two levels. Could sellers be attracted? We could buyers potentially take it up there? Absolutely. With this current momentum, the fact that this level didn't really do too much, that is the next major area there for pound yen. But of course, intermediate, this would be a level to keep an eye on. So market extremely bullish, still looking very healthy, still has room to the upside, which is important. We've, of course, had a massive breakout of this value area here. So now the opportunity is where could price pull back to refine buyers and continue this bullish leg? Well, that would be an area for one. We are still creating structure here on the intraday charts as well. So if you're looking for like a day, a trade for the day, I would suggest pullbacks into structure here, and then a push back to wherever the high forms. Let's say if the market continues up slightly, puts a high here, well, naturally that would be a target for the trade. If we start breaking through structure, so we take out this low, well, then the bigger pullback into this structure becomes a real possibility. Then we can look at a bigger swing trade off a retest here. So yeah, it's just about gauging the pullback depth for pound yen. Right now, the market's insanely bullish. There could be some nice day trade, shorter term opportunities just to keep buying the dips intraday back to wherever the swing high is. If these structural points start to fail, then you can look at the more significant area, which would be down here, 209. So that's the way I would gauge it. But we still do have room to the upside. We've seen the higher time frames. We're in a very bullish trend. Yen still looks predominantly weak. For me, it's a no-brainer. I think longs is still the best bet here. And New Zealand CHF, no problem, Wilfred, happy to help. In terms of New Zealand CHF, so again, pretty much the opposite of, well, I was going to say the opposite of pound yen. It's not really. It's not an aggressive bearish trend. It is the bearish trend, but not that aggressive. But yeah, New Zealand CHF, we are trending down. So now you ask yourself, is this bearish trend still at play? Is it still intact? I would still say the trend is still very much intact. It has changed structurally a little bit, because of course we have taken out some highs here to our left. So that doesn't indicate that the market is weakening. Doesn't mean sellers are completely weak and the trend has shifted. It just means they're slightly weakened. So price has gone a little bit deeper to go and find some stronger sellers where potentially price can now continue the trend. So I still do like the bearish outlook here. Looks like we pull back into some value to our left here. A really strong low. Prices pull back to retest that, and structurally has performed pretty well. And you can see bullish areas are starting to fail too. This is where we pushed, had a bit of a consolidation. You probably see it better on like a 4-hour chart. Had a nice consolidation, nice break to the upside. Now that level is giving way as well. So that's telling you that sellers are starting to come into play in the higher time frames. Buyers in the lower time frames are weakening. So I do think there is very much room back to our next area value, which would take us back to 0.454. So that's the area I would be expecting price to move towards. The only thing I don't like about this setup is how corrective we're looking. It's always better when price moves with intention, moves with high impulsivity. So you see big candles, causing large displacement. If price is really corrective like this, it means that the market's quite balanced, not really showing much intent. It always does lower the probability of the move. If you can break structure with aggression, that's a good move. If you break structure very correctively, still technically a break of structure, but it's not the same quality. So that's the only red flag I would say for this setup. You can see from a 4-hour perspective, we're still maintaining these lower highs. So I would suggest as long as we can maintain that, you've got a good chance for price to move lower. If we do start to break through this, then that does undermine the opportunity. If price does start to see a strong closure above this, then yeah, I'll be a bit more patient with the selling opportunities. Doesn't mean the move isn't going to happen. It just means we potentially might get a more complex pullback. So price could start having a bigger pullback, maybe even go retest the highs again. We have to monitor and react to what price is giving us. But if we do start to break structure there, that's a red flag. I wouldn't look to sell anymore. If we push into this high here and reject well, then the short back to the 0.454 is still on. So that's where my focus would be. But yeah, high time frame still very bearish, in my humble opinion. Philip, my man, what's up? Welcome to the stream. By the way, guys, if you're enjoying the stream, finding it useful, please be sure to smash the like button. Subscribe, it does really help out, and I do really appreciate it. Philip, Palin's the Profitable Friday stopped Sunday open. Unfortunate, man. Re-entered due slippage. That just shows a sell I didn't place. Really? Close, loss, and confusion. Weekend gap or liquidation. Ledger puzzles me. What is your bias on pound NZD? I'm still on a buy. Yeah, that's I don't get that. Shows a sell that you didn't place. That's worrying. That are you trading with a brokerage or with a prop firm? Because yeah, it shouldn't show. I understand slippage. I understand stops getting widened. I understand market reopening on the Sunday evening and how that can definitely mess with your trades 100%. It's happened to me many times, which is why normally if I'm in a position and the risk is not that high, I normally remove my stop loss before the weekend because I'm anticipating gaps, I'm anticipating spreads to widen, I'm anticipating slippage. So once the market opens and then 1 hour after the market opens and spreads normal and everything's normal again, then I can add my stop loss back to where it should be. Just a way to defend against that. Unless if I'm waiting to profit, then fine. So yeah, that's unfortunate, man. Prop firm, yeah, that's a bit weird, man. If you're seeing orders that you didn't place, I would try and ask for help there. But you're still bullish and you're still on a buy. Okay, we can take a look at pound NZD for you. We will go through. I just went through New Zealand CHF. Did I go through pound yen? Yeah, I did go through pound. Yeah, I did. We'll go through pound NZD next. What's up, Tony Gold, my man? Hope you're doing good. Welcome to the stream. Hope you're well. Okay, so where is pound NZD? So yeah, I would be pretty bullish in pound NZD as well. Market structure still pointing up, still consistent with the higher highs and higher lows, still maintaining bullish levels of value. Market still maintaining support, which is the biggest thing. The only worry I have is that we are starting to starting to consolidate a little bit more. The market's starting to tide, which is not necessarily a bad thing. The market's still bullish, buyers still in control. It's just that I'm not expecting price just to run freely to the highs with no resistance. So it means that if I'm in a long trade, I'm going to be very kind of not quick, but I'm going to be very vigilant to this level here. Price has tried to break through once, tried to break through twice, and a third time it really did fail. So that instantly has to be at least a target level for partialing or moving stops to break even, or even just to get out the trade completely. But the market's still healthy. We're still maintaining these higher lows. Momentum is still with the buys as well. So in terms of which direction to be playing, buys 100% make the most sense. If I drop a little bit lower, it gets a little bit tricky lower, just because we are struggling at some resistance to our left here. Market is very, very corrective. So it's not like the buyers have just come in with some intent. So buys look good. It's just we do have some struggle to our left. We have some noise. And that's the key characteristic with pound NZD. It's a pair which is quite noisy. So you always have to be careful when you trade it. And the best trades with pound NZD always happen when there is not a lot of noise opposing your direction. So yeah, I would be bullish, but this is a cause for concern. Because essentially, for price to get to resist, I'm not too sure what your targets are, but if your targets are up there, for price to get there, we need to break out of this mess. If price does start to continue to struggle, we could very much start to roll back over. And then it just becomes more ambiguous. Then we have resistance above us, we've got support below us. This potentially turns into a larger range. And then the trade idea is kind of not flat, but you're going to need some external pressure to get the market rolling again, which is a little bit more kind of hopeful than it's a likely event. If price now breaks through this, then yeah, the likely event is a push to the next level. So that's kind of what my main focus would be with pound NZD if I was long on that one. If we start to roll over back into support, it becomes a bit more 50-50. So be careful in that situation. Yeah, I'll definitely try and contact support with that, Philip, because yeah, having a trade in place doesn't make any sense, man. Unless you just you hit your head somewhere and you forget you placed the trade. But if that's not the case, then I'll definitely speak to someone. Aussie dollar LFTJ, we can absolutely take a look at. So Aussie dollar is an interesting market, very flat. We have to be careful with this one. It is in a larger range. The market has been correcting to the upside quite well, but to me, it just looks like we're getting ready to form another lower high, just as we did over here, just as we did over there. And I'm looking for price to eventually drop back towards support. But effectively, you could just classify this whole thing as a range. There's only a very slight bearish tendency with these lower highs. So the market it's bearish, but very, very sloppy bearish. It's not like a CHF pair, which is trended well, or like the yen pair is trending to the upside. So with that, you have to be careful. You almost have to treat it more like a range than a trend, just with a slight priority to the sells. But yeah, in terms of what we're seeing on the lower time frames, it looks like the market has pulled back. We have broken through some structure here. It looks like the market is starting to close back above that. Of course, the day is still in play, still young. We could still very much pull back. So I won't take that daily close to heart, because it could look very, very different by the end of the day. But effectively, we've got this very impulsive move off support here. Price has respected the lows. We have pushed back to highs, as you can see. Price has smashed back into resistance, and that's kind of triggered the pullback. So in terms of opportunity, there's not much opportunity to the upside, just because you got a level of resistance just above your head, which did start a pretty structurally quite important bearish move there. So you are trading directly into some key resistance. The opportunity I see for Aussie dollar short term is if we can have a bigger pullback back to some larger areas of structure, and then we'll see what happens. Maybe price finds support, maybe we break through and go back down to lows. The opportunity I see is for price to roll back over. However, for us to roll back over, it's not looking great anymore, I must say. because price coming into the week was maintaining resistance very well here. So you can see we had a push down, respected it once, twice. Now that we have this close back above it, for this to be a good sell opportunity again, I would need price to come straight back down on that next 4-hour candle. If it does start to hold support above here, then it's not a good sell trade anymore, because you'll be selling directly into support, which prices just broke through. Altogether, the move was quite corrective as well, which, like I say, is always a bit of a red flag too. You want to see moves with intent, moves with displacement, moves with a lot of big candles. That shows bigger players are making moves. If it's corrective, then it's probably just a temporary correction for price to continue. So always take that into account with structural break. So as you can see, we're starting to gain momentum. We're back above resistance again. If we hold above, this is more of a bullish signal for a push higher. Like I said, you've got a big obstacle above your head, so you're not looking for a huge trade there. But it's a trade opportunity at the very least on a lower time frame. So I don't see much here with Aussie dollar. The sales don't look good anymore based on structure. At the moment, buyers look like they're back in control, and we could see a push back to resistance. That's all I can see. Whether we get the break of this level or we don't get the break of this level, we'll monitor that as we get to resistance. But it looks to me that we've had this impulse. Markets dip below structure slightly. It looks like it's recovering that. It'd be nice to get a strong close on the daily to confirm that. And then you've got an opportunity to intraday trade that back to highs. That's what I'm getting from Aussie dollar right now. I want to take a look at the DXY, because DXY coming into the week was looking marginally bullish. We are seeing some downside right now. It hasn't broken any key structural areas, so I wouldn't say, okay, let's start shorting the dollar. This is still a very key area of support, and this is still a very key area of support as well. So we are coming back into noise, coming back into local areas of support resistance, where we could see buyers take that back up again. Of course, predominantly sellers are in control. We have been seeing consistent lower highs here. And the key thing is we've been breaking, daily swing lows to our left, which is really what the key take is. So there is still opportunity for price to swing back to lows here. There is still that potential move there for the DXY. I can still see that very much happening. Buyers are not doing a good job here anymore. So where are the larger players? Where are the bigger buyers? Well, the bigger buyers will be down here. We could see price make that move to go and find where the bigger players are if it wants to go higher. Sellers are doing a pretty good job. They're very much in control. I did say in the weekly analysis, it would be nice to get a pullback into this zone. Basically anywhere within here, you can concentrate your attention to this area specifically, but all of this will act as resistance supply for price to continue lower. So the plan coming into the week was looking to see if you can find some intermediate support, another run back to the upside, start to struggle, and that could be our next sell and our next lower high. Maybe price doesn't need that pullback. Maybe it's good enough to fall from here. That could be the case. But this would be in a very nice area to position yourself short. Look for continuation. I'm looking for something similar on euro dollar as well. If we have a quick glimpse at that, you can see euro dollar, although again looking a little bit bullish this morning, but we've got a nice area just floating below us over here, where price had a nice consolidation, massive breakout, very corrective move down. Despite the aggressive nature we had on NFP, it didn't really cause much damage, which is the key takeaway. A lot of people look at the event itself and just see big candles and they get caught up in that. Normally the follow-up question is, okay, despite this momentum, what did it do? Did it break structure? Did it respect structure? Did it just break through minor levels of support resistance? Did it break through major levels of support resistance? Is this trend changing, or is it still respecting the trend? Well, if you ask yourself those questions, you'll see that, yes, we broke through some minor structure to our left, but again, is that structure trend changing, or just a slight break of structure, less meaningful? And the answer is definitely less meaningful. So the buyers are still very much in control. It would be nice to see a larger pullback into value here, and then we can take that back into resistance. The only thing I'd be careful with euro is that from a weekly perspective, we're really struggling at 1.18. We're really struggling. You can see on the weekly chart, consecutive wicks above this area. Price is not seeing a successful close above this level, and it's had multiple attempts to do that. Doesn't mean that things can't change, because quite frankly, we are just consolidating here. Price is just building up, building up, building up. Eventually, it's going to have a breakout, either up or down. So it's failing now. Doesn't mean it will fail forever. But as a buyer, you're not going to have targets all the way up here. You can do, but I would highly advise you start managing your trade as soon as price pushbacks into resistance. You can see what happened last week there. We put a wick into the level, we came back down. You could easily do that again this week as well. If you're asking price to do something it hasn't done for a while, which is close above this level. So yes, we still do have a bullish bias here for Euro, especially intra-week, but we do have a massive ceiling above our heads, which is not too far away. You can see that's kind of even where NFP kicked in there as well. So yeah, I don't have a lot of room to work with, which is why it would be even nicer if we could have that slightly deeper correction and then find some longs off the back of that. Gives us a better risk reward opportunity. Replay, I think Aussie dollar looks like a great chance for a buy. I do agree in terms of current momentum, especially if you hold that level and get a solid daily close, just to show that we are regaining support. Then yeah, push back to resistance looks likely, and especially we've got the full hour time frame breaking structure to the upside as well. Looks like we're kind of breaking through this counter trend line. It looks like momentum is picking up for the buyers. So I would agree. Targets for Swiss yen on the upside. Yeah, as I mentioned, 200. That's the only reference we have. As I've said, price hasn't been here before. So any target you have is very, very discretionary. It's just a logical guess. And that's the best you can get when you're trading with a market like this, which hasn't been here before, even for like indices or crypto as well. People have 200K, 500K targets. It's just an educated guess. Nothing more, nothing less. So there's no kind of hard target we can look like, okay, yeah, price has been here before. Price got to this area and fell off a cliff. So that could be a target. Yeah, that's a bit more useful. Here, we have never been here before, but 200, very big psychological level. I can imagine a lot of orders resting there. We could see price being attracted towards that level. We could see potentially reactions there. But of course, the most important thing is waiting for price to get there and then seeing how it reacts. That's the important difference. We're not necessarily predicting price is going to react at 200. We're going to see what it does, and then there might be an opportunity off the back of that. Maybe a retracement, back towards support. But really, and that goes for most of the, most of the MPERs aren't at all-time highs. I think the only one will be Swiss yen. A lot of the data goes far back enough so you can see that we're nowhere near all-time highs for quite a lot of them, actually. Like Euro yen looks like it's at all-time highs, but yeah, data goes a lot higher. But we are at prices which we haven't been for a long, long time. So markets still very overextended, but the key element is to focus on what the market is doing until it's proven wrong. This trend is still very much valid until it's not. So dips, pullbacks is very much the thought process here. And a lot of them have had some really nice breakouts and left behind some really nice structures. So especially if you're looking at a 4-hour kind of trade swing, there's some really nice opportunities on some pullbacks back into 183 for Euro yen, back into this level 208 for pound yen, back into 196 for Swiss yen. A lot of the yen pairs are like that. Dollar yen's a little bit more choppy. Market's still quite bullish, still likely to progress to highs, but not really offering the same kind of structure as some of the other yen pairs have provided. So I'm not as keen to trade this one, to be honest. I think pound yen or Swiss yen is just a lot cleaner. The trend's clean, momentum's high, the trade's a lot more of high quality. So I'll be very, very careful there. So yeah, in terms of markets which I'm interested in, I'm liking what's happening with pound. I think there's opportunity with pound, potentially for a swing lower, but I need to see price showing evidence that we're breaking to the downside through these wicks. If not, price could still very much keep climbing. We've got potential levels where we have to be careful of. This high here, which gave us our last bearish move, which is where price is struggling at the moment. If we can break through that, that is a very bullish sign for pound yen, and we could start climbing some real, and gaining some real territory there, potentially back to 1.365, potentially back to 1.375 as well. A bit more intraday, we've had some consolidation, so I wouldn't get too excited with this momentum until price really does leave it behind. This is where price found resistance once, twice, consolidation at the level, third time. We have just seen another close above that. Let's see what this next candle does bring. If it's a breakout, or are we coming back down again? So yeah, I'm gonna keep a close eye on pound USD, sorry. Appreciate that unbiased analysis, no problem. I do not see USD going up until US 10-year yield back above 5%. Yeah, that's definitely something to keep track of. I mean, it would be difficult for DXY to do the opposite, to be honest. I mean, looking at the dollar, I mean, even just from a technical standpoint, it looks like it's really struggling to see some upside. I mean, we had this massive move here. All it did was just come back and respect highs. I think that was an opportunity. That was the opportunity for dollar to actually see some upside. If we saw a breakthrough 100 and some real displacement above that, so price really shows some momentum above 100, then I think, okay, this is like a double bottom and price is reversing. As we didn't get that, we respected it. We're starting to break lows here. I don't see price suddenly pushing to the upside. The path of least resistance to me looks like it's back to support at 96, 97. So yeah, from a higher time frame perspective, sellers look like they're in control. I don't see buys suddenly gaining. Of course, things can change, but it has to be very eventful to cause price to start breaking some serious structure and finding support in the middle of nowhere. So I do see price still slipping over to the downside, which again could move euro higher, Aussie higher, pound higher, and dollar CAD lower, and of course other USD pairs as well. The opportunity, as I mentioned, I was looking for was a pullback into 99. I still am. It still very much could still happen. We're looking bearish now. That could take in some early sellers for the week, run higher, and then sell later. That could be the case. Of course, we have to watch out because it is Christmas this week. So to be honest, we could just see a very sideways week. We might not see the follow through until maybe next week or even the week after. So yeah, DXY, I do agree. Everything is pointing very much to the downside there for the dollar. Structure, momentum, high time frame analysis. Buyers can't really find the bite. Euro USD showing the exact opposite. The only reason why I struggle is because you do have all these wicks here. So it's like, okay, if I'm looking to buy, I can only be comfortable with a short-term buy back into resistance. If I'm looking for trend continuation, which would mean a push back to the high here and further, if I go to a daily chart, back to this high and further, I'm asking for price to break above this level, which could happen. It's just I can't necessarily try and predict that with a trade. The better way to wait for the opportunity is to wait for evidence of price breaking above, holding above, and then that becomes a nice opportunity. You've got price above that key level, holding above, therefore you now expect continuation. Rather buying here with the expectation that price will break through, because we might not. We could dip a little bit lower before the move as well, and that could be enough to take you out the trade. So a bit of patience there. But if you're short term, when I mean short term, I mean maybe like a day or two, we could still see a swing like that, and that is still tradable opportunity if you use the right time frames. But for like real trend continuation, you're back to highs at 1.19. We're going to need to see price show a lot of evidence above that level. If not, then we've got a bit of a brick wall, and we're seeing a lot of that. Aussie dollar, if price is going to trend high, it needs to break through this wall. Dollar CAD, if it wants to trend lower, it's going to have to break through this wall here as well. If pound wants to break high, it's going to have to break through this wall. If New Zealand dollar wants to go high, it's going to have to break through this wall here as well. And if dollar CHF wants to trend lower, it needs to kind of break through this wall here too. So all kind of USD pairs are up against it a little bit. And even if I go to the DXY in the weekly, you can see there's a lot of wicks in this area here too. So that's kind of where I'm expecting. You can even identify that as a serious level as well, which is 97.5. Keep an eye on that too. So there is room for dollar to keep falling. It's just you have to be careful which pair you trade and where you trade it to. Mark, do you see more upside on NOK or SEK? I have not been looking at NOK or SEK, my man, but I can definitely have a look for you now. Not markets which I follow. I can't remember the last time I've actually had a proper look at USD NOK or SEK. So do I see more upside for NOK or SEK? I mean, fundamentally, I have no idea. Again, I don't really pay attention to either currencies. From a higher time frame kind of macro point of view, some of the technical analysis, USD NOK has broken some structure here, but there's a lot of support to our left where price could very well find support again and start trending higher. So this one looks like it's coming to areas where it can definitely reverse and push higher. There is the opportunity for us to come a lot lower to this area, but it's not needed. We don't necessarily need to see price make that move. It could very much find support and start pushing higher. So everything looks pretty bullish here for USD NOK. Not currently, we're still kind of pushing lower. We're still kind of having this slight descent, but soon enough, I would expect us to break higher. At the moment, we're actually still quite struggling. I would say if we can break above this high, that's your bullish indication. In terms of USD SEK, again, let me have a look at the higher time frames. Okay, USD SEK breakout of that consolidation. Again, same situation as well. We have broke out through major structure here, but how significant is it? Does it say that, okay, the market has to fall to zero? Absolutely not. We're still maintaining these structural swing points here as well. So, and we do have a lot of structure to our left here too. But I would say USD SEK looks a little bit more bearish. I actually wouldn't be surprised if SEK returns back to 8.8 or 8.6 before maybe finding some buyers to take it back up again and go and test resistance. So both of them are still very bullish long term. Daily chart looking really bearish here for SEK. SEK's already made that move, taking out those lows. I would expect this low to be taken out pretty soon. If we go back to USD NOK on the day, yeah, you can see USD NOK's got a lot of support here. So it's going to be it's going to take a lot of effort for us to break through that, and some strength too. You want to see like a candle like this kind of breaking through to show evidence, and then that could be the trigger, for push back to these lows here. If not, we might kind of just slowly drift back to highs, and then we'll see. So yeah, hopefully that made sense for USD NOK, USD SEK. I don't really follow those markets. To be honest, coal, yes, we can take a look at BTC as well. A lot of people discussing Bitcoin, especially where we're trading. Is this time to buy? Is this time to sell? To me, Bitcoin is still very indecisive, especially if you got a higher time frame point of view. This is where our range is lying. So, you have to ask yourself, okay, can price turn bullish here? Can we find the necessary buys to take us back to highs? Absolutely. Are we seeing evidence of that happening just yet? No, not really. We are seeing wicks, which means price is definitely respecting the level, but there's no evidence that we're about to move. It's very much a possibility. We could still consolidate here for a while, and price could even break to the downside too. So yeah, that could still very much happen. But if we see like a forceful candle, basically what we had last time, then yeah, that would be a driver for us to at least get back to our next big area, which I would say would be this range here. So push back to this area between 107 to 120. So that would be our signal, our catalyst to say, okay, we're breaking out, momentum's held, buyers have collected here, likely to go now test some opposing force opposing resistance, which would probably be up here at 107. So long term, we're still very much vigilant, waiting for more answers. Shorter term or slightly shorter term with the daily chart, very, very flat. So if you're looking for any opportunities here, you very much want to be looking to sell high or buy low. Any opportunities in between, you have to be very, very, very quick. But to be honest, I would avoid looking for entries there in the middle because that's where the balance is. That's where the uncertainty is. You're not going to extract too much edge inside the middle there. That's where a lot of people are going to give back a lot of their profits or just unnecessary capital away to the market. They're trading needless opportunities. If you're looking for opportunities on the daily, it would be shorts at the highs, longs at support until we get the breakout, and then we can look for trend following opportunities there as well. But yeah, there's not a lot of use on the 4-hour chart. Yeah, it looks like we're gaining some momentum here. It has no real meaning or significance. Again, you have to ask yourself, okay, what is this momentum doing to the market? Is it breaking significant structure? Is it creating new highs? Is it creating new lows? Is it invalidating structure of the opposing direction? If it's doing none of those things, then it's not really useful. It's not useful information. It's more so to do with noise. Until we start kind of breaking through these highs convincingly, then that's useful. That's something we can use to our advantage because a significant break of this probably initiates reversal. A break of some lower time frame structure within a range is what I would call noise. Yeah, you might be able to find like a short-term opportunity, but I would be very, very careful in those areas. So yeah, BTC, not much to take there. I'll be very careful about forcing anything in that area. Not much value there. Once we see evidence of momentum coming in higher time frame, like a strong weekly close, now that's opportunity. Remember, even if you're trading on the lower time frame and you're even executing the 15, always prioritize the higher time frame play, the higher time frame knowledge, because that's where the real, larger capital is being moved. Lower time frame treat only as execution. You're not there to derive a bias, for the day or bias for the session. Use session timings, use intraday opportunities to trade what the markets are doing from a more of a macro standpoint. That way you're better aligned and you're not really trading any noise as well. You're trading actual moves. And especially in a market like Bitcoin, which is not as liquid as FX or indices, very prone to liquidity, very prone to expansive moves, and prone just to big players taking money out of the market or put money into the market. That could drive price very, very quickly, very, very rapidly, and very event prone as well. So you have to be extremely careful in the lower time frames because it is just mostly noise. So, and that goes for a lot of the cryptocurrencies, Ethereum, BTC, XRP as well. They're all coming to some nice areas here where we can definitely expand higher, but we just don't have any confirmation to support that. XRP as well, you can see a lot of support here. Look at all the wicks, price is just piercing into this level. This is clearly an area where price is searching for liquidity to potentially continue higher. But again, I want to see some evidence that that momentum has come into play. And then that could be the catalyst that drives us back to highs. Because you're not here to necessarily guess momentum, you're here to react to momentum from significant areas, of course, not in the middle of nowhere. So if we can see evidence of that happening, then there's opportunities, especially dropping intraday to, maximize your risk reward. But any kind of buys or sells here just have to be short term. Because again, I think it's mostly just noise. Not every candle is information. Sometimes it's just clutter. And most of the time that is the case for the cryptocurrencies where less liquidity, more noise, more kind of just forceful surges of momentum rather than FX or indices, a lot more liquidity, a lot more kind of measured moves, not a lot more stable as well. So you can trust price action a bit more there. In terms of the indices, I do think they're looking pretty bullish again. I would like to find some pullbacks for them. I'm just not seeing any opportunities right now. We've had a bit of a dip for them past couple of weeks, but haven't really come back to areas I've been looking at. NAS, I was kind of looking at this low here, S&P, I'm looking at a very similar low as well. Looks like we're finding some support, some structure on the left here. But again, it's just I don't really have a lot of room to trade into. This is now where we're finding consolidation. So essentially, yes, we're looking bullish again. Yes, we're breaking through highs, but where we're breaking, where we breaking towards, we're breaking directly back into consolidation. So that just ruins the opportunity as well. Because a lot of people will look at a trade and they'll see evidence of reasons why price is likely to go in their favor. But a lot of people miss the final step, which is kind of looking, okay, price rejecting support, we're seeing heavy buying pressure coming into play. It aligns with the higher time frame narrative. There's a good likeliness that price is going to continue higher, which is true. But what's your overhead? What's the obstacles ahead of you? Is there a lot of noise ahead of you, or is there a clean path? That is a different opportunity altogether. If there's a lot of noise above you, that's immediately lowers the quality of the trade. If it's relatively quiet, relatively noise free, that makes that trade so much more significant, even though the setup might be the exact same. The path to your target actually is a huge factor of your quality of your trade. For example, you can see a lot of consolidation here. The markets consolidate because your buyers and sellers are in equilibrium. There's a lot of buyers here, a lot of sellers here, and they're agreeing on price. So therefore, if you're buying back into that level, you're buying back into where there's a lot of orders, a lot of volume, where that could easily send price back down again. So it's not like you're wrong in terms of direction. It's just that there's a big obstacle back to your target if it's at the highs, for example. Of course, indices not as effective as FX. This is very important for FX. In terms of indices, you have that natural drift, the natural trend. So you do expect price to break through those areas just because that's what the market structurally does pretty much all the time. So you can be a little bit more relaxed on those for indices. But FX, that's very true. In a market which it always rotates, always hits resistance, comes back to support, finds some more buyers, finds some more sellers. You have to be extremely careful in these market conditions, especially if your overhead's very, very choppy. So next time you do take a trade, check what your obstacles in front of you. Is there a big level of resistance, a big consolidation ahead of you? Either don't take the trade or maybe partial out at that area to protect yourself. Because the trade inherently might make a lot of sense, but the path from A to B, from your target, from your entry to your target, might just be a bit too noisy. And of course, with trading, things change as well. Because let's say you're expecting price to get from here to here. That could be a very logical time. That could be a very logical bet when you take the trade. But there might be an area where potentially new sellers get into the market, and then that doesn't become feasible anymore. The market rolls back over. So you need to be aware of where those obstacles do lie. And of course, you're not going to know with 100% certainty because new areas are created all the time. But if you can see where areas are trading in the past, they're likely to trade again, use that to your advantage. And that definitely will help you position yourself better and manage trades better too. Replay top 3 setups. Well, I'm going to be focusing a lot more on the USD currency pairs. I'm going to keep a close eye on pound USD. I'm liking opportunities for this either to roll over back to these lows here. So if I do see price form a lower high here, I will be looking for shorts back to this swing low and potentially even further as well. If I do see price break through resistance here, especially if it decides to break on the daily, then that would make me quite bullish there for pound. I'll be looking to target these highs here. So pound USD I like because I can see big swings in both directions. And if I can just position myself well for either one of them, inevitably one or two will happen. I can get some serious return on that trade just by focusing on high probability swings. So right now for pound, very kind of significant area coming into, because essentially price is either doing one or two things. It's either having a pullback of this bearish swing to continue lower, or price has had this bearish swing and this has just been a larger retracement for this bullish move. So that's kind of your flag for continuation. And we're coming into an area where price is likely to decide which one it is. we're coming to an area where, okay, we're probably going to form a lower high, or if we continue to break through, it's probably not a lower high. And this is, in fact, us getting ready to start running back to highs, especially if USD is going to stay weak, then that probably is going to be the case. So yeah, pound USD I quite like as well. Euro USD, I do like this one in terms of the market structure, because I'm seeing a lot of synchronicity. The market is bullish on so many levels, and now we're bullish here as well. It's just we got a lot of obstacles ahead of us, especially that weekly level. So I prefer pound. Aussie's quite cluttered as well above that high, so I'm being very careful there. With Aussie dollar, I don't just see a lot of return on investment. One thing I'm going to prioritize a lot going into 2026 is making sure that I prioritize trades which potentially have a large R potential if they play out, because I take trades of different sizes in terms of my potential return. I could take a trade of like a 1 to 2. I could take a trade of 1 to 5. But then, of course, in terms of the real drivers of my equity curve, it's going to be the 1 to 5, it's going to be the 1 to 4s or higher. Those are the trades that are going to drive me forward more. So next year, I'm going to prioritize it a lot more in the bigger setups, which means a little bit less in terms of frequency, but it's a healthy trade-off. The trades like this, where it's just like a 1 to 2 maybe back to highs, not that it's a bad opportunity. It's just, is it worth your time and money? If the answer is no, or maybe, then the probably is no. If it is definitely worth your money, then 100% those are the trades you want to be looking to take time and time again. And that's a good way to defend against drawdowns as well. So pound USD out of the USD pairs looks like the most attractive. I think Aussie dollar, again, like I said, short term is find some opportunities. So if you're a bit more intraday, you might be able to maximize that a bit more. Euro USD likewise as well. Short term, you might be able to maximize even this swing here, just back to highs a lot more. But I would be careful here with Euro, because we got resistance there, which looks really tricky. So again, if you do take a buy, you're met instantly with some resistance. Doesn't mean price can't break through, but it could get a bit messy. I think if we can have a larger pullback, it not only allows you to be further away from significant resistance, but you're buying for more significant support, and the risk reward's a bit better as well. So that would be a better opportunity. Yen pairs, I like what I'm seeing. Dollar yen's pushing high, but I would say Euro yen or pound yen looks a lot more attractive, just because we've had this surge and left behind some real value. So I'm going to be focusing a lot more on some retracement for the yen pairs. Again, I'm not too sure if it will happen this week. I think the markets will start to kind of dry out a little bit. What's up, Rexus? Welcome to the stream. Hope you're well. It might be even post Jan, to be honest. But yeah, in terms of market structure, in terms of clarity, the yen pairs are providing a lot of opportunity because they look like healthy trends. They don't look like they're going to slow down. So the pullback opportunities are providing some real value there. So yeah, in terms of pound yen, looks really healthy. Euro yen looks really healthy too. Pound USD, I'm interested because I can see swings in both directions. Crosses, I'm staying away for now. I'm gonna let them be. Indices I have liked, it's just they haven't pulled back enough for me as well. So my main focus, yen pair pullbacks, pound USD, kind of just biding my time until I can gauge the swing correctly. Right now, I don't have the necessary information to say, okay, I'm looking for a swing back to swing lows, or I'm counting on a swing back to highs. But those are kind of roughly where my focus will be. And then I'll see if I can get some opportunities this week. If I do get a trade, I'll look to take it. If not, then staying the sidelines is the best way. Deploying capital well is going to be very, very important, especially as AI starts to become more heavily involved in FX. It really is very involved in trading, but it's going to get even more involved. Best way to fight against that is to trade with higher quality and high accuracy. But yeah, guys, we have come up to the end of the stream. I will be live again throughout the week, Tuesday, well, not on the holidays, but Monday, Tuesday, Wednesday. Wednesday's Christmas Eve. Could do a little Christmas Eve, little stream there. That won't mind. but yeah, the holidays I'll take off. Then of course I'll be back again next week. But I'll be doing content posting on the channel as well. So do look out for that. Have you seen these trading bots coming up more often? Yeah, there'll be a lot more of them, man. There'll be a lot more of them, Rexus. A lot more trading bots, a lot more AI bots as well. You know, if you're very serious about trading and looking for longevity in the markets, I recommend to do a lot of research on AI in trading, where the value is, and how trading will look like in the next 5 to 10 years. Because if you can research that and be you're fairly clear on what the landscape will look like in the future, you can be prepared for it. You don't want to be the ignorant trader, and then things change, and then you're screwed. So you want to be definitely aware of it. I think the biggest takeaway in terms of AI is that the more kind of simple patterns, the more simple edges, they'll probably flatten due to overcrowding. So because of that, you want to be a lot more selective, a lot more accurate, a lot more precise. You want to add more constraints to your trading, so your trading um, is a lot more accurate than the crowd. If that's the case, then you're good. If it's just as accurate as the crowd, then you've got some real problems there. But like I said, I recommend to do a deep dive research into that because it's very interesting. And if you want to be trading for a while, it's definitely something to get familiar with. No problem, Tony Gold. Like I said, appreciate you coming into the stream. I will be live again tomorrow, so hopefully see you all there as well. Look out for some videos on the channel too. But as always, UK time, 10 a.m. I will be live, so I hope to see you all there. Thank you, Emmy. No problem. Happy holidays. Right back at you as well. But guys, take care. Have a good one. Trade safe as well. I will hopefully see you tomorrow. If I don't, I'll miss you. But hopefully we'll see you tomorrow. But guys, take care. Have a good one. Catch you all in the next stream.